All right. Good morning, everybody. So another day where we don't have anything. We're just waiting, waiting. Gonna be the new mantra. Just waiting. Every day I get asked, when is this going to end? More and more analysts are talking about this is the most hated V-shaped rally in the history of rallies, and it just keeps going, grinding higher. The one thing that continues to stand out is the promise or the hope of earnings and the concept or the idea that they're pulling earnings forward. I know that might not make a lot of sense if you haven't been trading for very long, but they're trading on the promise of future valuations that companies aren't even getting at this point, right? The train ride eventually ends when we have a quarter where expectations don't meet reality, right? So continue to keep your eye on earnings. We're going to be starting a whole new earnings cycle this month. Banks always kick off the earnings season and set the tone. And if you have been keeping track of the M&A deals, then you'll know that they've been spending money, making money. We'll see if they're able to spin it in a positive light. But that, to me, is where it's all going to come to an end. We've been waiting for some event to do it, right? As if there's going to be just this really negative catalyst situation and it all just comes crashing down. But I think it's too strong for that, and that it's more likely going to be something a little more balanced and fundamental like earnings that'll just dry it up. But right now the flows are just so strong, the amount of money that's coming in, that keep your eye on earnings, the big picture stuff, right? Like Goldman Sachs did their preview here of the upcoming earnings forecast. And by my wife's birthday on October 13th, 72% of the market cap will have reported. Of course, NVIDIA is set for November 19th. And they're looking for things to slow down from 11% down to 6%. So if it slows down below 6, if it doesn't even slow down anywhere close to 6, then you'll have a better idea about that answer. When is this going to end? And that makes sense, right? Once you stop and think about it, I know 13 is an awesome number. My mom's birthday is on a 13. My wife's birthday is on a 13. Yeah. I have a nephew born on a 13. You're a 13 too? It's a conspiracy. I'm a 14. I got here late. Hong Kong is up the most today, then Europe, Japan, and then the US is flat or mildly red. That's it. That's what we've got. And so if you think about it, the rally kind of faded out through the Asian session. Europe struggled just to be relevant, and we're opening up flat to slightly down. The exuberance faded as we traveled through around the world. My cat's going crazy. I'm going to take your catnip away, bro. The trade deficit doesn't look too far apart, all things considered. Got a lot of Fed speakers chipping teeth, but really we're not expecting them to say anything with relevance. Right? They haven't been. why they would suddenly do it now. They're all just saying the same thing they've been saying, repeating each other like an echo chamber. Just getting on record, right? That they just want to be on record saying, yeah, I said that. Remember, I agreed. So we got nothing there. Why don't we look at Tuesday instead of Wednesday? You know, I seen that oral report and I thought, there's no way today's Wednesday. No way. I didn't miss a day somewhere. Tomorrow we got the 10-year. Today we got the 3-year. I mean, I would never turn my back on data, but the 3-year just doesn't do it for me. Not really all that interested in it. Once we get through the morning session, we're going to get, all the goods and services, trade balance, blah, blah, blah. Really, I mean, that's just about it. The rest of it's just going to be Fed speakers banging their head on the table. Might get something out of the White House again today. Remember, everybody's focused on this government shutdown. Overnight tonight, we're going to hear from the governor that is bowing out over in Japan. I'm not even going to try to butcher that person's name. So if you are trading in the overnight tonight, as I've said before, listen to Bloomberg Asia if you're trading at night. It is a gift. It will really help you understand what is happening in the market. Plus, you're informed on whatever events are coming along. You won't get run over. Yeah, okay, there's some bilateral meetings with Canada today from the White House. We're going to get a little bit of that. And then lunch. I see Dally's out there chipping teeth already this morning, likely not saying anything of note. We'll see if these inflation expectations at 11 offers us anything. It's absolutely possible, but that would be it, right? So maybe 1 o'clock or 11 o'clock, we get the NY Fed 1-year expectation inflation. Otherwise, something out of the White House. That would be the two possible places where we could see outside influence. Other than that, it's just going to have to come from within. I pointed this out on SPY a little bit ago, but it's on the ES2. This is the 3-period daily moving average, this white line down here. And although this candle didn't exactly tag it, it's close enough. This market has been testing the 3-period daily moving average for the last 4 sessions. The last 3, and then again today. And on SPY, the picture that I was just looking at it a little bit ago, it's not showing on the daily yet because on Thinkorswim, you won't see the daily until after 9:30's open. So SPY will have that one too. But that's your line in the break on the short term, right? If you want just even a short term move to the downside, we've got to get through that line in the sand. Now, on the other side of that coin, I don't like shorting from the hole. I never have. It's just not in my DNA. So I'd much rather short across the highs and still be in it as it crosses through that low. The problem with that is then you're getting short while the market is breaking to the upside. We'll see how it goes, but getting through that white line, the 3-period moving average, offers us a chance to get down into that 10. And that's what we want to get into. Okay? Just want a nice little reset off of that 10. 67.50. It's a nice 100-point move. It's like a 125-point move-ish, right? 150. We'll take it. If you're using OCR, we've already started the lower highs while we continue to get the higher lows. So we're building into a fulcrum point or a pinch point. We are compressing, right? Compressed markets will expand with velocity. The call and the put wall did not roll, still in the same spot again today. We're looking at 54,000 in the overnight. It's a little light compared to what we've been seeing, but it's still it's within the norm. Nothing wrong there. And right now we are within this zone, the large gamma 4 combo 2 or the large gamma volatility trigger. This range or this zone, 50 points just about. And we've got to get out of that box. On the QQQ 1 hour, we're starting to develop a squeeze. The Bollingers are pinched in and it's beginning to compress. So we're starting to see this across multiple markets in multiple time frames. I think it's going to expand really nice. Now you can try to guess which way it's going to go, or you could run some sort of collar. You got to kind of have a pretty good account to run a collar. You could also just throw butterflies on either side. That'd be the cheapest, least risk amount way to go. Or wait for the signal. Today's ADR, we can get to neither one of these. We need an inside day breakout to hit either line, but we are closer to the lower line than we are the upper line. Just barely, right? Since we're just barely down, we're barely a little closer to it. But you would still need an inside day breakout to get to either side. Getting to the downside would likely close this Friday gap. And, you know, I do like to finish unresolved business. So I kind of favor a downside move just to get that gap closed. But there's no bias in this. We're in the middle. We're still inside Friday's range. So we're starting IX10 at this point. And we got a GTFO to do anything else. Get out of this box. It's as simple as that. Now, I don't know about you guys. Everybody's got their own. I don't like to trade in this sort of stuff, right? If this is what we have, I don't want it. If this is what we have, I don't want it. I'd rather trade a run or a leg out or sit and wait for it to get back to the edges like yesterday afternoon or even yesterday morning with that reversal at 10. I'd much rather do that than sit here playing in the middle. Don't diddle in the middle, right? So if we get that topside breakout, it'll be an inside day breakout, an inside week breakout, and it'll be through that options level. Yeah, the boredom box. We can get through all that, then we can get to 68.11 cog line and into 68.15, the ADR half. Today's floor pivot is higher than yesterday. That's bullish. Price opened above the floor pivot. That's also bullish. We've come down and we've hit that floor pivot, so it doesn't have any expectation or demands on us. And we've crossed through it multiple times, so it's no longer considered any form of support or resistance. We haven't really expanded from it yet either, so S1 and R1 are still on the table respectively. neither one owe us anything. And S1 is closer to us than the lower ADR was. The lower ADR was an inside day breakout. We can get to this one without breaking out. So that's good good info right there. Put that one on the books. 72 basically. If we break our own Globex low, we got to get through 72, which is really it's yesterday's floor pivot. Then get through yesterday's low and get the gap closed and into the lower ADR, like around 63 or 64. Otherwise, for an inside day breakout to the upside, 6803 is R1. Lines up well with all the other stuff that we had marked out yesterday. We're in the box for sure. Everything we look at is just tying us into this 50-point range. It's not very exciting to be inside day when you're trapped inside of a very large day. We want to be IX10 inside of a small day, like the range that we have so far today. That would be considered small. Then imagine 2 more days inside of this small day. That would be a fantastic IX10. It'd be like a NR3 at that point, right? Narrow range 3. But instead, we're IX10 inside of this big bar, which is Friday the 3rd. And it's just not exciting to be trapped inside of a big bar. But it is compressing, so at least that's offering a little bit of excitement. Got a really nice distribution, all things considered. We're just waiting on it. A really impressive reversal off of that 67, 65 area. Really all of this, right? That whole 10-point zone. It doesn't look like much because it's kind of flat. But if it was 0, then it would be all the way back here, right? And the fact that it's not shows that it had a lot of work being put in down here. The shallow area stands out. Me and this pen. Gonna go round and round one of these days. The shallow area. We can move through shallow areas really fast. So if we happen to break yesterday's low, Friday's close, Friday's low, we can get into this shallow area and end up around 67.11 rather quickly. It'd be this point of control from last week. Ten-day, 30-minute volume profile and TPO. Each new bar on the right, we'll remove one from the left. We're taking out that really weird, tightly wound range. I don't know if you guys remember that. It wasn't too long ago, but it was a really tight Globex range. And we're taking those candles off the board today. The next area where we've got a lot of candles is here. We built out that point of control. We got a zone at 67.67. And this is very likely where the new point of control is going to be. Probably not tomorrow, but at some point this week. Either because we build it out more as the week goes on, or we lose more candles along this central zone and by default, the point of control just moves up. That would be a nice thing to lean against for another leg higher, but it needs to be underneath us for that to happen. So we don't want to see price get down into like 67.50 and then have that point of control move over our head to 67.70. And now we've got this overhead resistance that we've got to work through. But if it happens to be underneath us when it rolls up, that really allows us to plant our feet and push to the upside. We don't have a new VPOC just because of the start last night when we dropped down through that level. The textbooks would tell you to mark this level out anyways, and it's very likely that it's not done yet. It is responding with price action. Might be worth carrying it across your screen today. I've got enough pivot points. I don't need another one. So unless it's a VPOC, I'm not keeping it. But, you know, the books will tell you to carry it forward. That's really close to 67.92 cog line. And for me, I'm just going to mark that because it's good enough. So you do you. If you want to carry forward this point of control, it absolutely makes sense today. We can see price responding to that level, even though it didn't at the open, which, you know, at the open, you got a flood of orders coming in. Things like pivot points and points of control, they don't usually do that well when you have, you know, situational flows like that. Not a surprise that we cut right through it like it wasn't even there. But when we tested it later, it did respond. So probably mark that one out, carry it through the day. It would benefit you, I'm sure. Although we're making a run at it right now, and it price is giving it a go right this moment. We didn't go anywhere and we didn't do anything. So there's really nothing here on the daily to see. We're IX10, which doesn't count until the end of the day, right? This day isn't done yet, so it doesn't count for the IX10 until after the day is done, because, you know, at any time today we could break out of the box and run up or down, and then it wouldn't be an IX10. So all we can say is that we are compressed, is forming a wedge. And at some point it will break because market compression leads to expansion. We're around 3% above the 10-week. That is getting into the edges of what we would consider acceptable. Once we get above 3.5, we have to start getting concerned about having moved too far too fast, and we might be looking for a pause or a mean reversion. But only 3%? No, we can go higher than that, right? And the way that you can tell that is just put your mouse up there at around 3% and look at how many times we've gone higher than 3% and we held it for more than a day. You can see, like last year from October all the way into the new year into April, we were holding above that 3 level quite a bit. Then later in the late part of April into May, we were above that 3%. So yeah, you know, just getting to 3% alone isn't enough. Once we start getting above that into 3.5, then, you know, we really got to start to make the argument that we're a bit overextended. We've moved too far, too fast. But this alone, nah, that's not it. On the daily, we're not even 1%. You know, and these are different time frames, but if you've got the daily at like 1.5, 1.8, maybe even into 2%, and then you've got the 10 above 3.5, getting into 4, now you've got my attention, and I will very much be looking for a reversal, or at least a real solid pause on an advance, but this isn't even above 1% yet. It's a lot closer to a 0.5% than 1. If we were rounding, we'd round down at this point. So we're not overbought, we're not overextended, we have not moved too far too fast, and it doesn't owe us any sort of pullback or mean reversion at this point. The 10-week, by the way, is often considered the mean. So if we did start to get a little squishy, weak, and start to fall, that's the target. So you're looking at a 3% move to the downside to get to the 10-week moving average. That's where you want to put your butterflies. They'll be cheap because it's 3% away. A 3% butterfly should be relatively cheap. And you can line that up with, some long put verticals or something like that. They should also be equally cheap. But that's if we started to fall, right? Not a recommendation for, some Tina trade or YOLOs, because not the right time for that. $67.91 cog line. We are there. GTFO, we got to get out of the box. The box top is up here, 93, so another 2 points. Once we get through the Globex top, we got to get through yesterday's high and then Friday's high, and then on we go. Okay. Otherwise, look to get back through the floor pivot and focus on S1, which is that 72. Below that, we've got yesterday's low, and then we can expand to the downside below that. Got S2 at like 53. The weekly floor pivot at 47. I kind of like that better than S2. I just keep looking at that and asking, what's the catalyst? What's the fuel that's going to take us to the downside? And it really looks like the market's waiting on something. It could be waiting on the government shutdown. It could be waiting on some data that we haven't got yet. I don't know. Remember, this week's range on the weekly expected move was greater than last week. They're pricing in a violent move, but it's not from a known unknown, right? A known unknown would be CPI, PPI, non-farm payrolls. We know it's coming. We just don't know what the numbers will be, right? A known unknown. When they make a really wide expected move range, it's from an unknown unknown. Something's coming. They're not sure if it's going to turn into anything or not. And so they start pricing in bigger moves on the threat that we could possibly get a bigger move. Looking at things that are down this morning, Bitcoin and Bitcoin and Bitcoin. Now the Mag 7 and bonds and gold are down a little bit, but not enough to meet our qualifications. And really they're just barely down at this point. I would focus on the fact that Bitcoin is down, since it's one of the biggest signs of liquidity and risk that we could use. It's a really great indicator. Looking at what's up this morning, got nat gas, quantum, chips, Mag 7 up volume, tech. Now the Mag 7 and tech, it's not up enough. It's only up, a 0.25%. We need 0.5%. But we've got the dollar, chips, quantum, uranium, and those themes are still really solid themes, right? The uranium theme keeps going. And that's a harder one to kind of wrap your head around, right? It takes a good 5 to 10 years with the government helping push it through. Otherwise, the the default time for new power plants, uranium is like what, 12 to 20 years for a plant, and they're sinking money into it like it's going to pop up next year and give energy. And these mythical SMRs, we don't even have one in the US yet, right? But whatever, everybody keeps piling money into uranium and it's doing really good. Quantum, you just had the Nobel winners announced. 3 people had advancements in quantum. It's doing good. And then chips. So those themes are solid. But that's not going to be enough to break us out by itself, I think. Chips could. Chips could break us out, but we need that rising tide that lifts all boats, right? So every day we try to answer that question. Could today be one of those breakout rally days? And if it could, then where would it come from? We've only got so many culprits, right? So many things that could make that happen. 0-day flows, well, you can't see that in pre-market. Mag 7 group, all right. We got a couple of those this morning. We can see that the chips are up, at least. If we was to dig into that, maybe we would find that it was NVIDIA, and that's one of the Mag 7. But otherwise, the Mag group, they're not up enough. Their volumes aren't up enough. It could be commodities. Well, we didn't see gold and miners and silver and all those on the list up like that. Treasuries, bonds, didn't see those in there either. So at this point, we don't have the conditions to get that rally. That doesn't mean that we can't rally, just that we don't have those conditions yet. So that's what you're going to want to keep your eye on once we get into the open. Are we starting to get 0-day flows? Do we have the banks, consumer discretionary, Mag 7? Are we seeing, moves in the dollar and bonds, treasuries, commodities, anything that can jolt this market and get it outside of this box that we're in? If we don't have that, we're staying in the box. Pretty simple. Pot stocks are up 1%, uranium's up 1%, solar and nat gas. Guys, you don't want a rally day based on nat gas, solar, uranium, and pot stocks. That's not going to get it done. And way down on the list is SMH, way down here with all this trash in front of it. And then we got utilities and no, nope. So we need more, right? Got to be greedy. We need more. Keep your eye on the Mag 7. See if we can get any of those guys to begin to participate. Google had that move back, and that was a nice short while it lasted. But I think it wants to participate again. Come on. It's at least trying to turn back around. So maybe if we get something out of Google, one of the other kids. It's likely not going to be Meta. Maybe Apple. Yeah, Apple, Microsoft, Google. We get those 3 kicking the door in, we could get somewhere. And then, of course, the chips. If AMD left any market share for anybody else, then, we could get something. So at least you have something to keep your eye on. Just watch that Mag 7. I just use the MAGS. It's a more modern version of the NY Fang, and it works in the pre-market, and I like it. You can use the old NY Fang if you like. There's nothing wrong with it, but it doesn't work in the pre-market. So, GTFO, right? We've got to get out of this range, and it doesn't matter if it's mags or the S&P, the Nasdaq, whatever it is. We're in a box, and we got to get out. So that's what I got for you guys. Be careful, be safe, keep your eye on the clock. I'll see y'all tomorrow.